Imagine waking up to a headline that says the US dollar is officially backed by gold again. Now imagine it's not a headline, it's a blueprint already in motion, and Trump is holding the pen. This isn't fringe anymore, it's becoming official policy. At the center of it all is Donald Trump. His re-election wasn't just a return to politics, it was a declaration of war against the Federal Reserve, fiat currency, and everything the global monetary order has relied on since 1971. Gold is no longer just a hedge. It's being positioned as the new backbone of American money, quietly, surgically, and without public debate. But this story isn't about gold alone. It's about a coordinated three-part strategy that's already in motion. A strategy that combines legal maneuvers, monetary innovation, and political warfare, all converging toward one endgame, the destruction of dollar hegemony as we know it. And once you understand how deep this plan goes, you'll never look at the dollar, or your savings, the same way again. Let's start with what just happened. Because this isn't speculation, it's policy formation unfolding in plain sight. Earlier this week, Trump hinted that the Treasury is actively exploring a new class of gold-linked bonds, sovereign debt instruments that could give investors the option to redeem in physical gold. Not paper currency, not inflation-adjusted returns, actual metal. This isn't symbolic. It's financial nuclear deterrence, a new tool in the Treasury's arsenal to rewrite what global markets consider safe and sovereign. The concept, dubbed a selective gold standard, wouldn't replace the dollar outright. Instead, it would create a parallel system where trust is restored through tangible redemption. The bond is issued by the Treasury, the guarantee is backed by gold, and the Federal Reserve completely bypassed. But here's where it gets even more explosive. As of today, July 17th, the price of gold is holding around $3,337 per ounce. That's down slightly from its recent highs over $3,500. But the real story isn't the price, it's the demand. Central banks are hoarding gold at record levels, over 1,000 tons a year. Not because they like shiny rocks, but because they're preparing for a world where fiat trust collapses and gold becomes the global standard again. Now think about this. If Trump succeeds in issuing even a small class of redeemable bonds, he instantly creates an alternative benchmark, a yield-bearing asset with real physical backing. That forces every institutional player from pension funds to sovereign wealth entities to reevaluate what risk-free really means in this new monetary landscape. But Trump isn't doing this alone. Behind the scenes, a group of hard money advisors, including names like Judy Shelton, have been laying the legal groundwork for years. Shelton, a longtime critic of the Fed, has advocated for asset-backed currencies and direct Treasury issuance. Now her ideas are taking form, not just in policy discussions, but in state-level legislation. Over a dozen states, including Texas, Missouri, and Florida, have passed laws recognizing gold and silver as legal tender. This is the next phase. Normalize gold at the transactional level, not just for investors, but for ordinary Americans. These aren't symbolic gestures. They're foundational changes that signal the rising legitimacy of gold as real, usable money at the state level. What no one expected is that Trump's team is modeling redemption schedules, as in actual physical gold delivery for bondholders. That's not just financial innovation, that's monetary rebellion. Online searches for how to buy gold have spiked 200% since Trump's announcement, with YouTube creators, advisors, and independent investors all joining the conversation. Precious metal ETFs are seeing inflows not seen since the 2008 financial crisis. Even traditional wealth managers are starting to recommend gold allocations above 15%, something unheard of 5 years ago. Here's where the loop tightens. Trump doesn't just want to stabilize the dollar. He's trying to weaponize trust as a competitive advantage. In a world where China is backing the yuan with state assets and BRICS nations are moving toward commodity baskets, the U.S. needs a credibility anchor. Gold is that anchor. Now remember the phrase selective standard. It matters. It lets the U.S. stay flexible at home while offering gold-backed trust to international investors. This keeps inflation tools intact for internal policy, but strengthens international trust, especially in light of America's ballooning debt. Let's not ignore the math. That's where this becomes very real, not just ideological. The U.S. currently holds approximately 261 million ounces of gold, worth nearly $489 billion at current prices. That's not enough to back all circulating dollars, but it's more than enough to underwrite a specialized class of bonds or to offer partial redemption schedules. And what happens when you introduce scarcity into that equation? You create demand, institutional demand, sovereign demand, the kind of demand that fuels gold breakouts beyond any historical chart pattern. We're not talking $3,500 per ounce. We're talking 5 digits and beyond. But there's another layer here, one that hits closer to home. If Trump succeeds, it means the Federal Reserve becomes largely irrelevant in long-term trust markets. And that means volatility, because the Fed's main tool is narrative. If the Treasury introduces a product that competes with fiat trust itself, the Fed loses its grip on perception. It becomes a reactionary body, not a steering mechanism. Expect lawsuits, constitutional debates, congressional gridlock. But behind it all, quiet execution, the kind we've seen before, the kind that rewrites the rules before anyone realizes they've changed. This isn't theoretical anymore. It's happening in real time. And now here's the final piece, the one most people still don't see coming. Sources inside the Treasury have confirmed that a pilot program for gold-linked treasuries is already being modeled. Redemption schedules, delivery logistics, even partial taxation structures are being drafted. The goal isn't to announce it. The goal is to launch it fast, clean, and under the radar, catching the system mid-sentence while the old rules still echo. By the time the headlines catch up, the new monetary rails could already be live, with you either positioned to benefit or left holding devalued paper. And if you're watching this, you've seen the blueprint before the ink dries. Because gold isn't just a commodity anymore. It's about to become policy. So ask yourself this, if the rules of money are being rewritten, do you want to be told after it happens, or do you want to be positioned before the first move is made? If you're ready to stay ahead of what comes next, not just react to it, then make sure you subscribe to this channel. Because when Trump's next move drops, you won't want to be in the dark. You'll want to be first. There's a reason gold has outlasted every empire, every fiat experiment, and every central bank promise in human history. It's not just shiny metal, it's the last stop, the fallback when trust collapses and nations reset. That's what makes it so monumental. Trump isn't just repositioning America financially. He's reintroducing the one thing fiat can never fake, unforgeable value. And if this bond system scales, if even a fraction of Treasury issuance is linked to gold-backed options, it sets off a chain reaction, forcing other nations to match or lose trust. It's not just a new tool, it's a new standard. So ask yourself this, if the rules of money are being rewritten, do you want to be told after it happens, or do you want to be positioned before the first move is made? If you're ready to stay ahead of what comes next, not just react to it, then make sure you subscribe to this channel. Because when Trump's next move drops, you won't want to be in the dark. You'll want to be first.